Well, we're looking at the latest property index that has been released for the first quarter by HassConsult, and certainly some interesting data coming through. I mean, we've had a push through specifically in terms of higher asking prices come through in the real estate market, and some would be surprised, especially in a context where we know higher interest rates have come to bear and a strained economic outlook moving forward. What have you made of that kind of price trend we've seen specifically over the first quarter?
Correct. There's actually been a surge in housing pricing, which was a bit of a surprise to all of us in the sort of data center. The case really for this is a lot of developers trying to hike up prices a little bit to see how best they can mitigate their costs. Last year we already had very high land prices, construction prices, and this has now been sort of escalated really by finance costs, which developers are trying to recover. But you see from the closing prices that really the gap between the two is kind of become a little bit wider. So it's showing that yes, there is a higher asking prices, but buyers are not quite willing to commit to that.
How's that influencing the demand-supply dynamic at this stage of the game, especially for the buy market specifically?
We've noticed that there's sort of a very polarized trend. This is sort of between the different segments of the market. So the higher segments of the market are doing okay in terms of demand. We found project uptake is still quite good. This is a market that's not dependent on mortgage financing. But in the middle end of the market, there's significant change in the volume of transactions, a lot of slower sales, buyers not quite willing to come through on payments, just in the hope that prices will fall a little bit or that at least interest rates will settle.
So in the interim, one's got to assume that this is having quite an impact on the rental side of things.
Definitely. We found that most people are opting to rent at the moment instead of buying. And in a market where we were already in relative short supply of rental stock, we're finding that rentals, despite the circumstances, are actually going up.
Let's take a look at the role that you see banks playing in this context, because, I mean, we've got a market in Kenya that's sitting in a very early stage mortgage or boasting a very early stage mortgage component specifically. And it's hard to see why banks aren't, waking up to this opportunity that possibly presents itself in the market right now, where there's such a reliance on cash buyers specifically.
Well, they were. Up until the third quarter of last year, we had seen quite a, sophistication of the mortgage markets, a lot of new lenders coming in, a lot of competition amongst the lenders. But with the hike in the, the base rates, it's just made mortgages much, much more expensive. But we've also presented this quarter a mortgage report, which is now, bringing a lot more transparency into the mortgage environment. And one of the things is to sort of document the spread in interest rates that's available on mortgages. And we found that there's a spread of 19% to 28%, which is quite a large spread for a market in these situations.
What's that outlook looking like moving forward then, Farhana?
Well, everybody is hopeful that, with inflation contained a little bit, that the interest rates will begin to fall a little bit. But we expect that housing pricing will remain static for at least the next couple of quarters. Followed by that, I think the fact that developers have put on hold a few projects, I think in the medium term, housing stock will reduce, which might put pressure on prices to rise again.
Let's take a look at housing developers specifically and why those projects have come to a halt. One of the factors that has been highlighted is that they're the ones more so feeling the impact of these very high interest rates that stand over in Kenya right now.
Correct. The situation is very prominent in the middle income market because specifically this is where the developers as well as the buyers are very heavily reliant on mortgage financing. So what developers are doing in these markets is just putting perhaps subsequent phases on hold, land banking, just holding on to land for the moment without actually going into development, because when you put projects into the market at such interest rates, your prices have to become quite high, and you're targeting a market that has a limited affordability. So in the middle income, certainly that's caused developers to pause a little bit. But in the higher segments of the market, I think activity is still, refreshingly okay, and I think project uptake there is still got good potential.